Well, the first phase of credit card reform becomes law today. The law gives cardholders 45 days to reject proposed rate increases, and they'll have the option of paying off their existing balances at the current rates over a 5-year period. But some are arguing that consumers with good credit may be hurt by the legislation. Are they right? Well, let's bring in Jordan Goodman, personal finance expert and president of MoneyAnswers.com, and Adam Levin, chairman and founder of Credit.com. Gentlemen, thank you very much for your time. You know, my very basic read of this is that the new legislation is essentially going to give consumers a little bit more information, a little bit more transparency, maybe a little bit more time to pay their credit card debt back, but it doesn't actually give them too much relief from those higher interest rates and higher fees. Is that the right way of reading this? Adam, why don't you go first?
No, I think it doesn't necessarily give them that much relief from it, but it does give greater transparency. It adds fairness to the system. It gives people an opportunity to have a little bit more time to develop strategies and a little bit more time to pay. But it's not the silver bullet, but it is a good first step.
What do you think, Jordan?
Mandy, transparency doesn't help when your rate are going up dramatically, and I'm hearing from people all over the country whose rates, you know, they're completely paid on time. Used to be 5%, 7%, now it's 19%. I was on a radio show in Philadelphia yesterday. Their rate went up to 29%, and they've always paid on time. So getting 45 days notice doesn't help you an awful lot.
It definitely seems to be something that's happening. You know, I've done a lot of reporting on this for NBC News, actually, gone out across the country, talked to a lot of individuals that have seen their credit card rates either skyrocket or their cards canceled altogether, despite the fact that they've always paid their bills on time and they don't have an issue. But basically, these credit card companies are looking at them and saying, you know what, you live in a certain zip code, or we're fearful because, you know what, we have a $20,000 line on that card with you and you're only using maybe 500 of it. So why should we have that exposure? Adam, how much of this is happening, do you think, ahead of the fact that the entire credit card Bill of Rights will soon go into effect in another year, and credit card companies are scrambling to basically not have this exposure to these kinds of risks? Well,
the reality is they've been scrambling to not have this kind of exposure for the past 2 years, while this wasn't even an embryonic glitter in anyone's eye. So is it possible that it sped some of this up? Maybe. Is it also possible that a lot of the problems that American consumers had relative to credit cards may have been a self-fulfilling prophecy because rates and minimum payments were raised over the past 2 years, lines were cut, and accounts were closed as well?
So in other words, it's a combination, you're saying, of the economy plus the rule changes, Adam?
I think that the rule changes may well be an excuse and to some extent a little bit of an accelerator, but I certainly believe that the companies have been scrambling to put their balance sheets back together again as a result of what we've all lived through in the past 2 years of irresponsible lending, irresponsible borrowing, and irresponsible spending.
Jordan, I'm also wondering whether some of the things that are being put forward, they sound good, they sound really good on paper, like you have the right to reject a proposed interest rate increase on your credit card. But then what? You reject it and then what? They cancel the card? I mean, is this actually something that's good or not?
You've got to remember there's been a huge amount of consolidation of the credit card business. You know, MBNA and Bank One used to be separate companies. Now they're part of the big five that own something like 80% of the market. So people don't have other places to go in many cases. And yes, they're seeing their credit lines come down dramatically. I mean, it used to be 10,000, now it's 1,000 or something like that.
So what would make a big difference? What would be legislation or reform in this area that would really make a big difference to consumers?
Well, I think getting the credit crunch, less restrictive. The banks are going to take out over $2 trillion worth of credit lines this year.
Yeah, and by the way, that's about half of all available credit in the system for consumers.
But they were going to do that anyway. They've made that announcement. Meredith Whitney predicted that and talked about that way over a year ago.
I disagree, actually, because I think the bank law is accelerating it dramatically, much more dramatically than had we not had the law.
I mean, it makes sense, right?
The banks say they're going to lose about $20 billion because of this law. And they don't say, all right, we're going to make $20 billion less. They say, where else can you get $20 billion?
Listen, I was a consumer regulator for many years, and I got to tell you that any time we ever proposed any kind of regulation on anyone, they would always come up with a host of reasons why the economic system as we now knew it would end because of any regulatory change whatsoever. We've seen the results of deregulation for years, and it hasn't really worked.
Jordan, what do people need to know here? I mean, is it that we're living in a new new reality where you can't count on your credit card line for real money? I mean, that could be gone tomorrow?
Your rates are going to be higher. The minimum payments are going to be higher. In many cases, they've gone from 2% to 5%. The interest rates are going to be much higher than they have been in the past. And in general, your credit lines are going to be restricted. This is a bad situation.
I also
Everybody's
can't see
talking
anywhere.
about consumer spending. How are we going to get consumer spending going?
Excellent point, consumer spending, because I can't see anywhere here any kind of message to the consumer that you've got to rely less on your credit cards. I mean, there's got to be surely some kind of incentive for people to not be relying so much on credit cards, which has got us into the problem in the first place.
We're seeing the fact that consumers are, to some extent, relying less on their credit cards. We've actually seen debit card usage move ahead of credit card usage. True. And we've actually seen consumer debt fall a little bit.
That's correct.
Possibly because some wanted it to, and possibly because some were forced into it. One thing is for sure. We are entering a new era where financial literacy is very, very important. We've seen the results of financial illiteracy.
You're absolutely right.
And hopefully now we will see financial literacy.
People are really hurting out there very badly. There is help for them, by the way. They should go to a national nonprofit credit counseling place. My favorite place is called cambridgecredit.org. They can actually get your rates down to levels that you can afford and actually not be paying 19% because you've always paid on time. There is help out there.
There is some help out there. Thanks very much, guys.